Good afternoon, everyone. It's great to be back at Korol again. Thanks to the conference organisers for putting on a fantastic event this year once again. It's nice to see some great results more recently in the industry and a real focus on high-impact wells and exploration again. My name is Scott Macmillan. I'm the Managing Director of Invictus Energy. We're listed on the ASX here. We tend to fly under the radar a bit, being an Africa-focused E&P company. But we've got a very, very exciting asset in Zimbabwe which has elephant scale potential. As all of you know, elephant scale is those targets that are 1 billion barrels plus, and something that isn't really well known in Australia but is grabbing major attention in the industry. We are an 80% owner and operator of the Cabora Bassa project, which is Special Grant 4571. That contains our exploration license. It has world-class potential, independently verified, a massive stacked target up to 8.2 TCF and 250 million barrels of condensate in the one single prospect. It's a huge stacked feature that has closure at multiple levels, and that was independently assessed by GTEC, and we released that prospective resource estimate on the 1st of July this year. We've done a huge amount of geological and geophysical work over the last 12 to 15 months to de-risk the asset from a technical perspective, and all the ingredients for a working petroleum system are present in the Cabora Bassa Basin. Source, reservoir, seal are all present in the outcrop further to the west, and has been sampled and mapped on the 2D seismic deeper into the basin and into our permit. What differentiates this particular play from a lot of other Karoo or Permo-Triassic plays in the region is the presence of lower Triassic source rock in the Cabora Bassa Basin, which is the key ingredient amongst all of these successful Karoo age plays across the continent, and even has some parallels with the Perth Basin. There's substantial local, regional and gas demand and a market that is supply constrained, and I'll go through the market opportunities in a second. We've had the luxury of actually signing a gas sale MOU ahead of our maiden well, and that's from Sable Chemicals, a pretty large fertilizer manufacturer in Zimbabwe. They've been trying to get a gas supply for the last few years, and very, very difficult to get a hold of gas in the region because of the short supply. They approached us because they see us as the nearest line of sight, both distance-wise and time-wise, to a potential gas supply. And they came to us and said, look, we're desperate for gas. We want to be first in the queue regardless of the size of discovery that's made. So 70 million cubic feet a day over 20 years, which is around half a TCF of gas, will underpin even a modest discovery. We're seeking to develop not only a local market in Zimbabwe, but also in the wider region, which is energy starved. At the moment, we're running a farm-out process, and that's in progress to select a partner, and there's a data room available for interested parties. A little bit more about the asset overview. We are surrounded by some pretty well-known both super majors and independents. Zimbabwe has flown under the radar over the last 20 years because of the political climate and investment climate there. But with the change in government in late 2017, it's now open for business, and this has now come to the attention of the industry, where Mobil had left this project alone 25 years ago when they'd explored in the country. They spent nearly $30 million acquiring 2D seismic, geochem, aeromag, and a lot of other data. And what they found is, or their conclusion was, that the basin was more likely to be gas prone rather than oil prone. And in the early 90s, there was no structured market for gas in the region. And coupled with a low oil price, they ended up relinquishing the acreage. That data was then subsequently not available in the public domain and had never been promoted. So it hasn't been seen in the wider industry or anywhere up until now. So we've gone and acquired this data set. We've reprocessed all the data, brought it up to modern day standards, and we've had some pretty spectacular results and identified this absolutely enormous target that we're chasing. We've got an experienced Zimbabwe management team I'm a Zimbabwean, as you can probably tell from my accent. My family's been in business there for a very long time. Our country manager, Brent Barber, did all of the field work to get Mobil interested in the country and subsequently ran their exploration project in Zimbabwe for a number of years. So we do know our way around the jurisdiction. At the moment, our environmental impact assessment is in progress, and that'll clear the path for the future activity, including drilling. And this is some giant-scale potential in one of the last undrilled rift basins on the continent. An overview of the company. We are capped at around about 13 million. In terms of the director and management shareholding, we've got a significant amount of skin in the game, nearly a quarter of the company, and the top 20 making up nearly half. We eat our own cooking. The directors have participated in the placements, buy on market. We believe in this company and in the future. The directors and management. Recently, we've had Dr. Stuart Lake join the board of Invictus as non-executive chairman. He's a prolific oil and gas finder. He's made over 300 discoveries in 11 countries worldwide. He's had a fantastic track record at Shell, Apache, and Hess as head of their exploration and new ventures, and more recently opened up a couple of new discoveries in Ghana with AGM Petroleum. He's got a 90% track record exploration success rate, and he likes our project technically, and so hopefully we can add another notch to his belt. Why Zimbabwe? As I mentioned before, it's been an overlooked jurisdiction for the last 20 years. However, the new government has implemented quite a significant amount of investor reform to attract investment back into the country. They've amended the Indigenization and Empowerment Act, so you now have 100% foreign ownership allowed, and special economic zone legislation that's been enacted really does provide legal and fiscal stability and will help protect your investment. A number of other benefits, 5-year tax holidays, 15% corporate tax after that, zero capital gains tax, and also the ability to bank offshore so that no money has to pass through the financial system there. This is a schematic of the Mzarabani prospect. As I mentioned before, this is a multiple stack target. We can test all 5 of these horizons with a single well and test a gross 8.2 TCF and 250 million barrels. Our primary target, which is the alternations member of the Upper Angwa, the top structure depth there is at around 2,500 meters, and that contains an estimated 4.4 TCF and 187 million barrels of condensate. So on a barrels of oil equivalent, that's 965 million BOE, so just shy of 1 billion barrels of oil equivalent. So an absolutely enormous prize for a pretty cheap onshore well cost of around 10 million US. And this is the largest undrilled seismically defined structure in onshore Africa. More importantly, in this horizon that we're chasing in the alternations member, you've got interbedded source and reservoir. And so it's, and in this key lower Triassic unit, which separates all the other successful Karoo plays from the ones that aren't. The independent prospective resource estimate carried out by GTEC, which we announced on the 1st of July, a total prospective resource across 2 structural prospects in our permit of 9.25 TCF and nearly 300 million barrels of condensate. And that's the second prospect is the Bassa, slightly smaller at around 1 TCF, but still pretty material. The domestic and regional gas market overview. Everyone in Australia is very familiar with the gas crisis that's going on the East Coast. I encourage you to look into the crisis that's going on in Southern Africa. It is, it's pretty dire at the moment. There is a huge energy deficit there and really no immediate fix in sight. South Africa's gas supply, they do not have much indigenous gas. Most of their gas is imported from onshore Mozambique, and those fields begin to decline from about 2023. The big offshore discoveries made in the Reservoir Basin up to the north are 2,500 kilometers away, all controlled by the super majors who are putting in multi-billion-dollar LNG export infrastructure and aren't interested in supplying the regional market. And they're committed to beyond 2030 with LNG exports in any case. Zimbabwe, though, serves as a gateway to the rest of the region. Although it's a landlocked country, it's a very important import-export corridor to the deepwater port in Mozambique at Beira, and all your bulk commodities that come in and out of Zambia, the DRC, Malawi, Botswana, they all pass through Zimbabwe on the way through. So a huge amount of infrastructure in Zimbabwe that people don't realize, because you have a lot of beneficiation of those bulk commodities that happen in Zimbabwe before they're exported. So it's relatively industrialized compared to the rest of the region, and that's demonstrated by a pretty substantial demand from one single customer, Sable Chemicals, who's only servicing a very, very small part of the fertilizer market at this point. In addition to pipe gas to the domestic market and South Africa, we can service some of the regional markets with small-scale trucked LNG. A bit on the Southern Africa Power Pool, which services 12 countries in the region to a population of 230 million people. That enables cross-border electricity trading between the 12 member states, and all of that's actually run out of Harare. The spine of the Southern Africa Power Pool runs through Zimbabwe into the rest of the region, and so you're ideally placed to export electricity anywhere across the region. South Africa's aging coal-fired fleet are going to see a number of power plants retired over the next few years. Around 10,000 megawatts of electricity is going to leave the grid in South Africa out of a total supply of 55,000. So it is getting very, very crucial there. The short-term supply gap is going to be filled by diesel-fired power, which is an equivalent gas price of around $27 US a gigajoule. And so gas to power is becoming an increasingly important part of the needs. So by being connected to the Southern Africa Power Pool, you have a virtual pipeline that enables you to export gas all over the region. This is a study that was done by Power Africa, who looked at the regional supply and demand balance. As you can see in the bottom right-hand corner there, South Africa is facing a sizable supply deficit by 2030, and that's due to a lack of supply. Botswana and Namibia, relatively small markets. Mozambique, although sitting on a large gas surplus, has a number of monetization challenges to bring it down into South Africa, which is the industrial engine of the region. In a low scenario deficit situation, around 738 million scf a day of gas supply deficit. And under a business as usual at 1.1 BCF a day, that's the entire Western Australia domestic consumption. That's shortfall in supply. And nearly 2 BCF a day, which is the entire Eastern Australia and Southeast domestic industrial and power generation consumption. So an absolutely enormous market in South Africa, which is facing acute shortages. This is a pretty busy slide, but once you get your head around it and you understand the numerous opportunities we have to monetize both gas and liquids in the region, it'll really make sense, and the value proposition why a project like ours is so enticing to players looking to participate in this part of the world. 25 years ago, when Mobil were exploring in Zimbabwe, there was no gas market. This was a blank canvas. The onshore fields, Panda and Temane, which are on the in Mozambique, those were discovered in the late 50s, early 60s by Gulf and hadn't been developed until 2004. Those fields now supply 85% of South Africa's gas consumption and will fall into deficit, fall off plateau in 2023. There are numerous opportunities that we can monetize this through. We've got Sable Chemicals, gas to power, industrial customers, export to South Africa to fulfill the deficit I just talked about, as well as condensate export that we can get to the Beira and the deepwater port, and some pretty reasonable pipeline runs compared to what's already been built in the region. These are some pictures of the source and reservoir rocks that we've sampled just near our permit. The alternations member, as I said, contains both source and reservoir, very, very clean porous sandstone that we're chasing, and source rock that's capable of generating a lot of liquids as well as gas that are in the good to excellent category, and high reservoir quality of high teens to mid-20s porosity and hundreds to up to over 1,000 millidarcy plus for reservoir quality. This is a seismic slide showing this massive Mzarabani prospect, multiple stack potential. The flattened structure maps on the right show you the closure at each level, and so we can hit all of these again with a single well. This is a top structure of the prospects and leads. Again, that's that enormous Mzarabani feature. The red outline is the main target that we're chasing in the alternations member, Upper Angwa, and that is around 200 square kilometers under closure. In summary, we've got an enormously exciting prospect and acreage position, and that'll provide us with running room and success. We've got a number of different play types. We've got an enormous market to place any discovery that we make into, and that's because of the strategic position that we sit in the region. We've got a very supportive government that's very engaged and egging on our success, and we've got a very, very low-cost onshore exploration proposition with excellent infrastructure in place that we'll be able to monetize very quickly, and so the risk and reward balance is well and truly stacked in our favor. So as I mentioned, we're running a farm out process at the moment, and there is a data room available for anyone who wants to participate. Thank you very much.